what I'm going to talk about are something called cognitive biases. And those cognitive biases may have an effect in many areas. And most of the time they're discussed in relation to the capital market, in relation to marketing, consumption, but very rarely towards taxation. However, I would like to present some aspects of those biases in relation to taxation. I will talk about conformity, what is driving conformity, a little bit, portray the concepts of biases and analyze those biases that, as I said, may have a relation to taxation. For a very long time, scientists were concentrating in their research on decision-making, but were taking into account a certain approach, and that approach was assuming that people are always acting on the rational basis. Of course, there was a difference between psychology and economics. Psychologists were defining decision-making as a cognitive process, either rational or irrational, emotional or unemotional. However, when it comes to the economists, we were always saying that decisions are rational and they are driven by preferences. And we were also making plenty of assumptions, like, for instance, one of the assumptions was that the decision-making procedure is not important. Yeah? And then the rationality assumption was also crucial in many mathematical models. So those models were defining payoffs, were defining utility, but it was very hard to say what those payoffs and utility are. In fact, in the 1970s, a new concept appeared, namely the concept of behavioral economics and behavioral finance. We started to notice that people make their decisions not only on the basis of a payoff, but also on some other aspects. Yeah, and sometimes people make decisions just out of the thin air, like they're using the so-called heuristics, which is a mental shortcut or rule of thumb. It's basing the decisions on the intuition, or we are just making an educated guess. And what is very important in that behavioral finance is also something called framing effect. So when the brain is making decision, it is making this decision on the basis, of course, of information, but the presentation of this information may be different, and we also taking into account the form this information is presented. And it is very well illustrated on that amusing picture. So imagine the world being a huge elephant, and you can only see a part of that elephant. Then, of course, everyone next to the parts of this elephant will perceive the world from a different perspective. And that's why people that are doing this research in behavioral finance and behavioral economics are thinking one important thing in our decision making is the reference point, and everyone may have a different reference point. And that's why it is important to have these conferences, global conferences, because sharing information and sharing our different reference points to different phenomena in the world, it is very crucial to see the whole picture. Yeah, and because we do not see the whole picture and we are subject to this framing effect, we may commit some biases in our decision making, and those biases are somehow deviations from the rationality and judgment. It is hard to say whether it's a mistake or not, because it also depends on the situation. We use heuristics, so the simplification in our thoughts while we're making decisions, because it is It is reducing our effort. Sometimes we are exchanging difficult questions with simple questions. It's fast and frugal. Imagine you have to answer a question, what is the number of animal species in the world? Of course, you may Google it out. You may of course, search in a encyclopedia, but if you don't have any reference point, then it will be very hard to guess it. And of course, if I give you the reference point, you will adjust your answer to the reference point I was giving you. And that was proven in the scientific experiments. What are the most popular biases? Very popular bias is the so-called confirmation bias. And it is used in relation, or it is observed in relation to taxation, but in many cases, it is also observed when we have elections. During elections, if you have your own candidate, then of course you have a tendency, so it was proven by experiments, you have a tendency to seek for positive information about your candidate and then overlook negative information. Then the next one, especially observable in relation to taxation, is the so-called conformity bias. And it says it is a positive bias or a negative bias, depending, of course, on the situation, because the conformity bias is causing people to follow the crowd, and to follow the crowd. And sometimes it is positive when we are being compliant with taxation, but sometimes it is very negative because cheating is contagious. Imagine there is a huge number of people cheating, like students in the exam. And of course, those students who are not cheating may be very easily swayed toward the negative behavior. And similarly, bandwagon effect, and it is well illustrated on that picture. Bandwagon is the tendency also to do or believe what other people are doing or believing. And of course, I will not concentrate on some details of conformity, but when it comes to taxation, you may notice also something called metric effect. So people usually say that we prefer that rich people pay more tax. Yeah? And of course, it is achieved by progressivity, but in most of the cases, people don't understand the concept of progressivity. And the experiments show that if tax rates are expressed in percentage, people have a tendency to support progressivity more than when tax is expressed in dollars or other currencies, so in value. And that's is called progressivity illusion. And that is also a very known bias when it comes to taxation. Another experiment shows that we have a tendency to pay taxes, or we are less tax averse when we call a levy not a tax, but we call it a payment. Yeah, and that is a very good advice for people that are devising taxes. And sometimes you can see that the names of taxes are changing. For instance, in Poland, they changed a name of dog tax to a dog payment. And penalty aversion. People do not like penalties, but they like bonuses. But in the standard economics, in the past, a bonus was considered absence of a penalty, and penalty the absence of the bonus. And of course, now concluding briefly, the topic is very wide. It is not used in relation to taxation. Only a few experiments were conducted, only a few papers published in this regard. But what are the clues or what are the conclusions from those papers? People are systematically overestimating risks of tax audits, and that may be hidden behind paying taxes in general, because um, because when we consider only rationality of decisions, that paying taxes should not be considered as rational. However, there is negative aspect about some biases, and that the most negative is that non-compliance is contagious. And when we have already a country with high corruption rate, then the phenomenon may be spreading very quickly. And also a negative aspect is that due to political parties, due to elections, we have tax systems gravitating toward taxes that impose the minimal psychic pain, and so the spending of the governments is increasing because political parties have a tendency to offer maximalization of psychic pleasures for the voters. Yeah, so biases may have positive and negative aspects, and it is very important to implement some kind of nudging to persuade people to follow in the right direction. Thank you very much.